Hey traders, this is Blake Morrow with Traders Summit, and I have the distinct pleasure of having two fine gentlemen, fine young gentlemen with us today. We have Mr. Matthews from One.io, who's looking around in circles, and Mr. Michael Brown with Pepperstone. Good to see you, gentlemen.
Good to see you, mate. How
Good
you
to see
doing?
you, Blake.
It's nice when I get the both of you together in the same area because then I don't have to flip cameras back and forth. But it's nice to have you right next to each other, and you guys both look good. How's life been?
Yeah, it's all good. Market's
Yeah.
keeping us busy. I think I'm just getting slightly worried about your eyesight, Blake. Are those glasses working?
Yeah,
Young men.
young men.
To make a long story short, these are the AR glasses, and if I don't wear them, my capillaries burst. It's crazy when you got a bunch of monitors. So I do it for my own protection, and that's about it. But anyway, enough about me. Let me ask you guys the question that is like eating at everybody. What are your thoughts across the pond with the US presidential debate that we just had a couple of days ago?
A classic, absolute classic. What do you reckon?
Well, I mean, usually pantomime season is in December, but I think it's come a little bit early this year. I mean, it was a bit of a shambles, to be honest, wasn't it?
Would you swap Starmer for one of them?
If it meant we got rid of him, maybe.
Yeah, we will send you Starmer. You can have him.
Well, all right. Well, without getting too political, let me ask you guys this, and just staying on the politics like point of view via the markets, your thoughts. Just let's talk currencies really quick. If there is a Trump win, are you guys in the same camp that most of the world is? Trump win, good for the dollar. Harris win, bad for the dollar. Are you guys in that camp?
I'm not sure I'd say a Harris win is bad for the dollar. I think, well, first thing I would say is a Trump win would be good for the dollar, almost mechanically, because you would see currencies like the CNH or the CNY and the Mexican peso just fall off a cliff. So that's obviously going to strengthen the other side of that equation. I think the Harris one's a bit more nuanced because it very much depends on who wins in Congress. If it's a Harris presidency, but the GOP hold the House and or the Senate, then that's going to massively water down any sort of potential policy proposals. But fundamentally, government spending is going to rise and the deficit's going to widen. And ultimately, you would say, is that bad news for the dollar? On its own, yes, but everyone else is doing it anyway. So does it really matter?
How long has it been rising for? How many years has the deficit been rising? It doesn't seem to
probably since you were a boy.
Thank you. Since I was a lad.
Well, okay, then let's shift away from the political conversation. Let's talk a little bit about the markets. We've seen this insatiable bid in treasuries, and yields have been dropping quite aggressively. What are your thoughts on how this move? What's the outcome here? I mean, and what's the reasoning? Is it because you have everybody knowing that rates are going to be coming down, and you're getting a lot of institutional buying just to capture what they can currently? What are your thoughts there? And let's start with Dick. Let's go with you first.
I think that's basically it. I think institutions want to capture the yield. Would you go and they're probably long of equities up to the eyeballs? Would you buy more equities at these levels? Probably not. Let's capture the yield. Interest rates, sadly, going to cost me 100 quid to say this. They're only going to go one way. So I think it's just sit on the yield. Thank you very much, and take no risk. I can't blame them at all.
No, I think you're absolutely right. And also, if you look at the 3-year auction that we had on Tuesday, we had record indirect demand at that auction, which proves the point of institutions just trying to get involved. The 10-year auction we had yesterday, or on Wednesday, I don't know when this is going out, that stopped through by 1.4 basis points. So there is a lot of demand out there. And I think that's exactly what's driving yields lower. It's a case of, as Dick said, rates are only going down. Let's lock it in while we can.
And what's amazing is you hear all these analysts and experts talk about just the relentless supply of treasuries, and we'll never catch a bid in the bond market. This would be reverse us a couple months back. They've been wronged, wouldn't you say?
Yeah.
Oh, absolutely. Yeah.
I know you. I was wrong.
Yeah. I mean, I think that. Well, I think the concerns were justified. I think, we all raised concerns about the supply that we're going to get, but, demand has been insatiable, as you alluded to earlier on.
All right. Well, let me ask you this: is this the story that's driving the gold market higher into breakout territory? So, Michael, let's start with you. How do you feel about gold where it currently sits?
Yeah,
And
maybe impossible question.
yes, of course. To you, Mike.
I've got
To
my
you.
gold here, worth more and more and more. It's
That's
tempting.
worth about 100 grand.
Almost paid for the divorce.
You're gonna get robbed right next to you. Like you're gonna just get sucker
Put my hand
punched.
behind my back.
Oh,
Just watching
dear.
it.
What's driving gold? I'll be completely honest. I've got no idea, and that's been the answer that I've given pretty much all year. There's been a lot of stories around, is it central bank demand, particularly in emerging markets? Maybe. But, ultimately, you look, particularly in the short term, obviously today, Thursday, spot gold's hit another record high. I think it's just become a momentum trade, to be honest with you. Whether you argue that it's central bank buying or falling treasury yields or a weaker dollar that kind of kicked off the move, I think now it's just become a momentum trade. And ultimately, all of 2024 has been a momentum trade. You look at the dollar rallying earlier in the year, you look at the equity market, not just single stocks like Nvidia, but the market more broadly. It is just kind of all about that momentum, even if I could say it. And I think gold's just kind of piggybacking on that, really.
Yeah, I tend to agree, actually, but you're going to kick me for saying this. I still think that the world's in a really, really dangerous place, and I'm not sure it's the best idea.
He's warmongering again.
I think it's the best idea to start lobbing US-made missiles into Russia, UK-made missiles into Russia. Sooner or later, someone's going to get hurt. I still think the Middle East is an absolute shit show. Excuse my language, and could easily accelerate out of control. I think there's a bit of that in gold. But I also think that, treasury yields falling. Why not? Why not have something in gold?
Well,
go ahead.
For a second. I can't believe I'm asking this question. But as if the world is going to hell, as you posit there, what's the hedge? Is it gold or is it crypto? I know you love talking about that.
Gold for my generation, crypto for the younger generation. And quite honestly, I've always thought the best hedge is vodka. You can't drink bloody gold when they come knocking on the door, can you? And I might fall off the wagon and start drinking again. No, I think there is a generational gap.
Yeah.
Actually, your generation is much more prone to buy crypto than my generation, and we would inherently buy gold.
Sure. All right. Well, let's shift our conversation to the dollar because, over recent weeks, the dollar has absolutely gotten pummeled. Whether it's yields, whether it's a anticipation of weaker data coming out of the U.S., which we really genuinely haven't seen. And now that we've got all the data ahead of the Fed, let's talk about what your views on the dollar are. But more importantly, how do you view the Fed as we go into this last meeting before the presidential election? So Dick, let's start off with you. I'm giving you the easy one, and of course I'm gonna give Michael the hard ones. So Dick, where do you stand there with the dollar?
It just makes me smile that it's a presidential election. It's just with the two least likely candidates to be a president. I find that quite astonishing. I don't know. I think the Fed I think they'll cut by 25. I don't think they'll cut by 50. I don't think there's a need to cut by 50, to be honest with you. Looking around, the ECB's cut. Bank of England's probably not going to, in my opinion. If I had to have a play, I'd probably buy cable against the euro. I don't know, the dollar.
It's a difficult one.
It's a difficult one. Unless you believe that the Fed's going to cut by 50. I don't think there's any need to do so. And if he does, I think people will go, oh my God, he's seen something we haven't seen in the unemployment figures, or something really nasty is coming. And you could actually start a bit of a panic.
Yeah, I think there's no need to go 50. And I think the CPI numbers that we got on Wednesday have actually helped the Fed because they've seen the market price out 50. I think we're about 27 basis points in the curve now. So the Fed can do 25, and it's what the market expects. I think the debate around the Fed needs to move on, because whether they do 25 or 50 in September doesn't really matter. And we all know they're going to do 25 now anyway. I think the real question is not what they do at the next meeting, but how quickly do they want to get back to neutral? Now, if you assume neutral is 3%, after next Wednesday, they're going to be at 5%. how quickly do they want to get through that 200 basis points to get policy back to a neutral setting where it's not tight and it's not loose? Because there's an argument to say you do what the BOE do or are doing, which is you go, once a quarter very, very gradually. But there's also an argument, and I think this is the case that market participants are building, which is, well, you want to get to neutral. You're confident inflation is on its way back to target, and there's signs that momentum in the labour market is slowing. Why the hell would you hang around? Yeah. So I think the framing for the Fed is going to be important, because you either do 25 on next Wednesday and kind of go, we'll just take things slow and steady, data dependent, meeting by meeting, or you guide along the lines of Chris Waller's speech last Friday when the payrolls report came out, which was, now is the time to act. We need to remove restriction. If the data deteriorates, we will front load. We will do more. We will move more quickly. And I think the real question for markets is, is it a story of it takes 2 years to get to neutral, or is it a story of it takes 6 months to get to neutral, or is it somewhere in between? But I think in all of those scenarios, the dollar is probably a little bit too weak where it is at the moment, particularly given this recent round of pressure came basically after Jay Powell stood at Jackson Hole and told us everything we knew already, which was a very odd catalyst to spark this downwards move.
Well, is inflation dead?
I'm sorry?
Is inflation dead in the States? From an average consumer's point of view, as opposed to looking at the numbers?
Well, I think consumers, this is where Main Street's, meets Wall Street, where if you ask an average consumer, is inflation dead? They would say no, because for consumers, inflation means prices go up and then down. What I don't think the average consumer understands is that when inflation goes up, it plateaus. You don't go from gas from let's say a carton of eggs going from $5 to $7 back to $5. They go to $5 to $7 and then they sit at $7 and then they never come back down again. And I think for the average American, their inflation expectations are still probably relatively high. So that'd be my best guesstimate. So are prices surging higher anymore? No, I don't think so. But have they come down? So in the consumer's mind, do they feel that things have changed? The answer to that question is probably not. So it's going to restrain consumerism to a certain degree, I would think. But yeah, it's interesting. How about over there in the UK? How are you guys feeling?
I think it's probably the same thing, really, isn't it? I think everyone's just kind of adapted to this sort of new normal, I suppose.
Yeah, I still go, I can't believe the cost of that. And, I can't believe I say that on the coffee or my weekly shopping's that, or, I still I'm shocked by prices.
I agree. But at the same time, yes, now, for example, if I went over the road to the pub and paid £7 for a pint, I'd probably go, that's £7. Well, in some places. There you go.
Last time I bought a price, it was £2.50.
You could be using shillings.
Actually, I was going to say it's £2.10 shillings.
But it gets to a point where in a year's time, if it's still £7, you kind of just go, well, that's how it is. That's you just accept it. So I think you're right. It will take a while for inflation expectations to level out a little bit.
Well, okay, I'm going to ask you guys the last question, just because obviously equity markets have had a nice snapback rally. I know, and I particularly was looking for a bit of a pullback into the next couple of weeks. I've been very surprised by the bounce back in equities. Do we have further to go? I mean, taking into account that seasonally, this is not typically a good time in the month of September in an election year to be involved in the equity markets. We are not very far off of where we started in the month of September. So, Michael, let me start with you, because you've been a pretty how should I say, loud, obnoxiously loud stock market bull, but you've been very bullish, for quite some time. Has your attitude changed at all? And Dick, maybe you can add on to some of those comments.
Well, it's a little bit ironic, actually, because I did put a note out after the jobs number saying that, we're probably now in a stage where the market wants more cuts than it's going to get, and that could pose some headwinds for risk in the short term, and that seemed to mark the bottom. But never mind. Over the medium term, I am still bullish. I think the Fed next week is obviously a key risk. If the framing and the narrative and the rhetoric is more hawkish than markets would like, then you would expect a leg lower in equities as a result of that. But
which is funny because you might get the 50
Well,
basis points
exactly.
and you sell off on that.
yeah, I agree. But yeah, over the medium term, I think dips are still going to be relatively shallow, and I would be buying the dip. I think there's more room to run to the upside. You know, you said that the bull case I've had all year is threefold. It's economic growth is strong. It is. Earnings growth is strong. It is. We just come off the best quarterly earnings growth rate since the back end of 2021. And of course, the Fed have got 500 basis points to cut if they need to. They can bring QT to an end. They could even go down the QE road again if they needed to. So, yeah, I don't see any huge sort of longer term risks for equities at this point. And so if we were to get this 5-10% pullback, then I'd be a buyer.
So then, before Dick, before you answer there or put in some comments, I have to ask you, since you've obviously you and I have been around trading for a long time. You know, this is the PAL put has been put back on. I mean, is this affecting the way that you view equities? Just what Michael said. It's like the Fed's got plenty of room to cut. You can't, it's hard to fade, right?
Yeah, absolutely. The only thing I will say, we'll add to this, and correct me if I'm wrong, and you'll go away and look at your charts, that in the run up to an election, every time there's been an election, equities have weakened into the election and then rallied afterwards. And it might be just worth looking at that. And I don't know whether that's people just go, oh, you know, I'll take my profit off the table, look good, and then look afresh when after the election. And of course, you could well have Trump as the governor of the Fed if he has his way. So, I agree with Michael. Buy the dips.
Yeah, and you know, I hate to, you know, I hate to always say that we're referencing the S&P, but let's not forget, you know, you look around at other markets. You've got the FTSE. I mean, your exchange is not far from all-time highs. Either is the Spanish markets, the DAX, CAC 40. Of course, CAC 40 is you know, not looking as hot being in France, but and China's China, but you have a lot of other markets. I mean, you have the Nifty 50 for crying out loud. That's the Nifty. Or not the Nifty 50. The Nifty is up. I mean, it's at all-time highs. I mean, you know, markets still structurally globally don't look bad, right?
But how anyone could buy the CAC or the DAX, I don't know.
Because the stock market's not the economy, I guess.
Yeah.
That's been our argument here for a long time, right? So
yeah.
What do we know? Hey, you know, guys, it's always great catching up with you. I really, I know it's probably fun for you two sitting in the same room and in the same office.
Okay.
Dick, hospitality. I bring him in on meeting room here, and that's what I get.
Before you go, Richard, and before you leave that office, make sure that wedding ring is still on your finger. All right. So,
I'm going to painting as well. So.
All right. Well, hey, gentlemen, love having you here. Tell us, traders, best way to follow your work. I know, and I know, Michael, you're doing a lot of writing there at Pepperstone now, so and other shows. So tell us a little bit about how we can follow you.
Yeah, exactly. Pepperstone website, pepperstone.com. All of our written work is there. We do a few bits and bobs on YouTube as well, which is also Pepperstone, funnily enough, of course, with your good friend of mine, Ryan Littlestone, as well. And then my personal Twitter, Mr. M. Brown, where I post various thoughts and observations throughout the day.
And every morning.
Every morning as well.
You chattering away.
Indeed.
I'm not nearly as active as Mr. M. Brown. My personal Twitter is at Dickie Matthews with a 5 instead of the S. And you can find me on www.one.io for some occasional thoughts.
Do I actually have to put .com behind .io? I mean,
no, just .io.
Just kidding.
I say .io.
I've got no idea.
Look, I'm Generation X. What do I know? Anyway, guys,
what am I? Generation B. Bloody difficult.
Gentlemen, it has been a pleasure of mine, and I'm sure it has for the folks at home. So if you guys and gals have enjoyed what you've heard here, make sure you give them a thumbs up, give them a follow too, and comment down below if you disagree that gold is a momentum trade, because that is what these gentlemen think it is. So, guys, thank you so much. I'll look forward to catching up with you hopefully in the next few weeks.
Indeed.
Great.
Take care, Blake.
Cheers now.
Cheers,
bye.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.